how do we choose stocks? Because yes, I can tell you right now, hey, go get a broker account, go, pick some stocks. But how do you pick businesses, right? So let's talk about that. Let's get into that.
And with those three principles, you can build all kinds of structures on that. But that's the foundation. And if you've got that in mind, and that's in the Intelligent Investor, I've never found anything that remotely compares with it. All three of the ones you can't get rid of one leg of the three-legged stool and still have a good investment philosophy. But I would say that the most important thing over a long period and working with big money is to understand the business. Let's just say for the moment that you were given $1 million or whatever sum was necessary, and you could look around Knoxville or look around all of Tennessee if you want, and buy into any three businesses, between now and a week from now, private businesses, not trading or anything of the sort. And you got a week to do it, or you have to give the money back. What will you be doing during the next week? I mean, you can look at all these companies. Some of them you're quite familiar with, some of them you're less familiar with, some of them you know by reputation, some of them you know the management, some of them you don't. You know their competitive situation. What will you be thinking about during that 7-day period? How will you actually be screening these companies out? I think you'll look for three businesses, and you can't trade them after you buy them. You're gonna own them the rest of your life. You're gonna be looking for businesses that have enduring competitive advantage. You don't want to buy a Burger King franchise just because nobody's come within 10 miles of it yet, because Wendy's and McDonald's and all of those will be there pretty soon. I mean, it isn't necessarily who's earning the most money now. You're going to look for something with enduring competitive advantage. Now, that takes a business with some kind of a moat around it, because capitalism, by definition, is a system where every time somebody has an economic castle, somebody else is going to come after it.
So, first rule of thumb, right? When we're trying to choose a company that we want to invest in, right? We got the account, we got the money, we're ready to start buying some stocks. We excited, we good to go. Okay, cool. What do I buy? Right? How do I choose the company that I want to basically, invest in long term, right? First and foremost, the company has to have a competitive advantage, which also basically goes into the moat conversation, right? Competitive advantage, right? What does that company do, right? That's so important to where they basically are the number one or number two player when it comes to that segment of business, right? So an example of this would be, let's say, who is the number one no, let's not do retail. What is the number one technology company in the world? What comes to your mind when you think technology? Oh, let's talk about computers. We got monitors, internet. What comes to mind, right? The number one technology company in the world, I would argue, is Microsoft. Microsoft basically is in everything, right? We use it on a daily basis. People use computers. We use their applications, right? As someone that works for the government, Microsoft has the government contracts, right? We all utilize, Outlook, and basically Teams and all of these, applications when it comes to, Microsoft. So Microsoft has a competitive advantage over other companies because they have this conglomerate that they've built over time, right? So when he's talking about a castle, what he's saying is when you build a castle and you think about the castle as the company, as the business, right? And it's high walls. Think about the old school stuff where they used to fight each other, but the walls were so high, like Troy, for example, the walls were so high to where no one could invade Troy because they were so well, established as a business. That's what he's saying about a moat, right? People will try to come and take you over. There will be capitalism, businesses trying to come and take you over, but you're so strong of a company that you have a competitive advantage that's so large that people can't compete with you. right? So the first thing that we want to pay attention to when it comes to choosing a stock is we want to get a great business that have a competitive advantage that's almost nearly impossible to compete with.
It's just the nature. If you open a restaurant and it's successful here in town, somebody's going to take your menu and probably take your chef, maybe cut your price, maybe offer a little more parking, maybe be a better okay, whatever. I mean, capitalism consists of going after the other guy's castle. If that's the case, you want a castle with a big moat around it. There's a lot of ways you can have a moat around something. You could have it by patent protection. You could have it by location in certain areas. I mean, if you have something in people's mind, like Coca-Cola, 6 billion people in the world, practically all of them have something in their mind about Coca-Cola, largely favorable. They don't have anything in their mind about RC Cola. And if RC Cola spent $1 billion advertising, they wouldn't have anything in their mind about RC Cola. But they've got something in their mind about Coke, and generally it's favorable. That's why Coke wants to be where people are happy, because they want to be at the theater. They want to be at Disney World. They want to be at the World Series. They want always have you drinking that drink of Coca-Cola while at the same time experiencing happiness. And if they do that, they're going to sell a lot of Coca-Cola. And it won't make any difference if somebody is a half a cent less on some serving of Coke. So that's an enduring competitive advantage. And you want it run by honest and able people. You don't want to go in with a crook, and you don't want to go in with a dope. Now, the best businesses to buy are the ones where you could have a dope in there. I mean,
all right. So number two, you want great management. We want to have, the CEO, all of the people, the executives, the board. We want a business that have really good management, a great CEO, somebody that's going to run the company the right way, that's going to do the right things. So one, again, competitive advantage. Two, a great CEO. Off the top of my head, right? Amazon, great company. Jeff Bezos, amazing CEO, right? He's no longer the CEO now, but he was for a very long time, right? So Microsoft, great CEO. Everybody's up in arms about Tesla right now with Elon, but Elon has been proven to over time be a great CEO. He might be a little different than a lot of people, but I mean, my man got Starlink, Neuralink, SpaceX, Tesla. He's built amazing companies, and will continue to build amazing companies. We know for the most part that Elon is a great engineer when it comes to his businesses, as well as how smart he is, right? So you want a great business with competitive advantage, with a big competitive advantage. And then secondly, you want great management and a really good CEO.
Peter Lynch says, buy a business that's so good that an idiot can run it, because sooner or later one will, and there's some merit to that. In fact, I got a question the other day from a student group, and they said, what's going to happen to Berkshire when you go gaga? And I said, well, Berkshire's so good that I can go gaga. In fact, I may even be, those are the kind of businesses to own. So you want a management that's able and honest. And then you want a price that's sensible. And that's what you'd look for. You'd go around Tennessee, got a week to do it, and you'd immediately screen out a whole bunch of things.
So the last thing is you want to buy it at a great price. Right. So we talked about evaluations and how to, and when to that margin of safety aspect, and being able to jump into, a business at a great price. Right. What Warren is saying is, hey, economic competitive advantage, two, great ownership and great CEO management and executives. Three, you want to get it at a great price. If you compare all three of those things together with great companies, then you have an opportunity to buy a company and buy a business when it comes to buying stocks.